Today I want to talk a little bit about my own strategy, how I find my trade setups and decide when the best time to enter or exit the market is. I believe that my strategy encompasses pretty much core concepts that for any Forex trader must master to become consistently profitable trader over time. But first, just a little bit about me. I know that Reed just gave you a little bit, but I have been trading the Forex exclusively since 2002, focusing all of my attention to this market solely. And for the past 6 to 7 years, I've been providing daily market analysis for the 7 major currency pairs that include the US dollar through Forex Traders Daily in a live daily trade room. You know, folks, right now is a pretty exciting time to be in the Forex. Even with, some of the craziness going on around the world, people are making amazing profits. I hear about it every day, trading currencies. Recently in my trade room, I had a trader that was just at the end of his trial period for the trade room tell me that in just 2 weeks he had seen a 27% gain in his account. That's pretty amazing. And all he had to do was follow the simple strategies that I'm going to pretty much lay out here for you today. And by the way, at the end of the webinar, or at the end of my time here with you, I'll give you an opportunity to access my daily analysis. Again, what I want to do today is show you some of the basic strategies that I use in the market every day to make the trading decisions to be long or shorter or get out of my trades. And in a few minutes, I want to pull up the live charts and show you some of the examples that we've been trading over the past few days. But first, take a look at this saying. It's been quoted from Benjamin Franklin. He's been quoted as saying, "Tell me and I forget, show me and I may remember, and involve me and I may learn." You see, trading is an activity. It's not a spectator sport. You kind of have to roll up your sleeves and get your hands dirty. And until you do, you can't really truly understand what it means to be a trader. No matter what strategy you decide to employ in your trading, it will be the practical application on a daily basis of that strategy that will be the true test of your understanding. Let me be clear that trading and, of course, technical analysis, which I'll be going over, take time to master. First you have to develop a trading strategy, either on your own or copy someone else's. Then you have to master that strategy, ideally, before you put your own money at risk. So the question, of course, would come up, where do you start? Well, what I found out early on, mostly by trial and error, is that there is an overwhelming amount of trading information out there. And it's a kind of a daunting task to sift through all of that information. Just take a look. I've just assembled a list of technical indicators that you could probably have available to you out there. And this, of course, is just a few of the common indicators that are out there that you'll see available on any free trading platform like MetaTrader. There's dozens to choose from, and you can see as you look through them, there's probably going to be variations of multiple variations of many of these. Take, for instance, moving averages, or not to mention the different interpretations and uses of tools like trend lines. So really, just how do you decide which one of these indicators to use? Because you could spend months, or as I found out, even years trying each one of these, and you might have a little bit of success, but more likely you're going to have a lot of failure through that trial and error. Now, I'm in no way saying at all that all of these are bad, because used correctly in the right market conditions, each one of these has some value. But just think, if you try to apply only half of this list to a chart, you could barely see the market, the candlesticks, and the price action for all the lines and bells and whistles on the chart. So really, how do you whittle this list down to begin developing a winning trading strategy? And I would say that there's really 2 critical factors for making consistent profits in the Forex. First, my suggestion, as always, is to keep it simple. That's my trading philosophy, is to keep it simple. Pick a few indicators that are available out of that big long list. It could be 2 or 3 or maybe even 5, but pick ones that are going to make sense to you, and then master them. it's going to be better to master a few than, of course, be a slave to that entire list of indicators. And when you choose the indicators, what you're going to do is you're going to use them, pick ones that are probably well or mostly known, because that's because a lot of traders use them. First off, why do a lot of traders use them? Because you will find more training and information on how to use those common indicators than you would a lesser or unknown indicator. And second, there's a reason that there's a common indicator out there and it's widely used, because if used correctly, it will work. So what I'm saying is, don't try to invent the wheel. And when you finally settle on a few indicators, master them, become their friend, get to know them inside and out, the better you understand how they work, the more useful they're going to be to you. And when you've settled on those few indicators and develop a strategy around them, be consistent and employ the strategy in the same way all the time. You know, some people will tell you that consistency means that you're going to win on every trade or almost every trade. And that's not really what consistency means. You know, even when you're a consistent trader, you can and will have losing trades. What I'm saying is you must develop a strategy that will work for you consistently over time. You know, trading is not one trade or 10 trades for that matter. Trading is something that you will work at over dozens or hundreds of trades. And if you follow a similar strategy over time, that's what you're going to call consistent trading. And keeping with that simplicity, I generally will stick with the major currency pairs. This is my strategy. I look at them somewhat like the indicators. There are a lot of currency pairs out there to choose from. Some of them are a little bit more volatile than others. Some of them have higher trading costs. Some of them will make you a little bit more money, and some will make you a little less. But each has its own, you know, think of it like a personality. It might even be that you just want to trade, you know, the currency of your homeland, and that's fine. But pick the ones that work the best for you. Get to know their personality of the currency pair. You know, however, whichever pairs that you decide to trade, the trading strategy, the overall plan that you apply to each pair will likely remain the same. So then you apply the indicators of your choice, and for simplicity's sake and for the time that we have here today, I'm going to discuss with you support and resistance. Now, don't get, you know, put off by, hey, everybody knows about support and resistance. It's a simple thing, and you really, you know, kind of brush me off. Bear with me. I think what you'll find by the end of my time here with you is that you'll really understand what I mean by support and resistance. I think that's kind of a broad term that everybody uses, and we need to bring that into what can really work for us. You know, these are the classic bumps in the road, so to speak. There are many different indicators that I just talked about that you can use to identify these levels. Of course, first off, you could simply draw a horizontal line to represent historical levels of support and resistance, but that's really just the beginning. Additionally, you could use tools like Fibonacci to mathematically identify naturally recurring levels of support and resistance. And if you're not sure what I mean by that, you're going to have to find it on your own, because we don't have near enough time to go over Fibonacci here in this webinar today. Anyway, you could also use tools like pivot points that calculate potential support and resistance using historical data from the previous trading day, or you could use multiple variations of moving averages to project potential support and resistance based on price averages. Whatever you decide to use, they all pretty much do the same thing. They identify what I'll call potential barriers in the market. And these are fairly easy to identify once you know what to look for, which in turn makes them a widely used common indicator. And what I like about using these types of tools that imply support and resistance is that you can look back in time, days, weeks, months, sometimes even years, and find that the market has recognized these levels over and over again. So as with any barrier in the market, there's really going to be two main scenarios that you're going to look for. Okay, and these are going to be the key decision points that you will need to recognize when you are deciding to take a trade or not. First is the potential that you could look for a bounce, and this is where the market stops or stalls for a period of time, maybe short or it may be long, and reverses and goes back in the opposite direction. The next scenario, as you see here, is a potential break, and this is when the market passes through one of those bumps or those barriers in the market and continues in the direction that it was previously moving, or might even call that the direction of the trend. Now, I think the best way for me to explain all of this, we could look at pictures and slides all day long, but what I want to do is just bring up the live charts in the real live market and just show you exactly what I do on a daily basis so you can really get a handle on the way I trade. So give me just a second here, and I'm going to bring up my live charts. Only take me a second to get it up here. All right, you should now see my live chart. And if you can see my chart, just type something in there and let me know. Give me a quick Y or something or yes to let me know that you're seeing my chart instead of my PowerPoint now. All right, looks like everything's good to go. All right, what I want to do is I want to walk you through a few currency pairs and show you what I mean by what I consider support and resistance. I actually want to walk you through 2 or 3 trades that we've made just today, suggested just today, and a good amount of profit being made. I'll start here with the pound dollar, GBP. USD. This is the currency pair we're looking at right now. The little red dashed line that you see right here is a trade that we entered this morning, made a good amount of profit, about 120 pips on the trade. A really nice trading opportunity. But before I get into that trade, let's talk about how I'm going to define those barriers in the market. And when we call it a support and resistance, like I said, that's kind of a broad term. I'll say support, and you say, well, it's a price barrier on the bottom that the market had a tough time getting through. But I think that's just a broad term. I think, and I look at support and resistance as decision points. They're decision zones is what I like to call them every day in my trade room. It's a decision zone. It's not the decision zone where maybe you and I, as smaller investors, have decided to get into the market. It's the decision points where the big money, the banks, and the big investment firms are looking to trade. Why do I know that? Because we're looking in the Forex, a $4 to $5 trillion a day volume market. We, as smaller investors, we're amoebas in the market. We really have no influence on the market. We can enter all of our money at the same time, and it's not really going to affect the market. It takes millions and billions of dollars to make the market move. Each one of these candlesticks that we're looking right here, whether it's red or a bearish candle or blue as a bullish candle, we did not make that candle red or blue. Okay, just get over the fact that you think you can control the market. We did not make, in a $5 trillion a day market, we did not make the candle red or blue. But the big money is. That's where the big money is doing. So when you see a level where the market comes to a complete stop, like it did up here, and I'll just bring a line in, when you see the market come to a complete stop like this and turn around and go back down, it wasn't smaller investors doing this. This was the big global market. This was the investment firms. This is the world banks making this market turn around right here. And we'll call that a resistance point. A resistance is where the buyers exit and sellers enter. You can about lots of different things. You can think about flow orders or bank flow orders or whatever you want to call it. I can look right now and say there was a spot right there where the market would buyers exit and sellers enter. And I don't have to look at that current time. I can go back in time, and I said this a few moments ago, you can go back days, weeks, and even years and see the market do something very similar. It's a decision point that the market did something very similar, entered or exited back in time for years. How do I know that? Just follow that line back in time. We didn't have to see this. We could go back here. We're looking all the way back here into July of 2012. And then you go back here in December of 2011. Then you go back all the way back here into January, actually December of 2010. So we're looking all the way back to 2010 for a clue of what happened just over the past 3 weeks here on the pound dollar. So we didn't have to make up any guess about it. We had an idea of where historically buyers and sellers, banks and hedge funds and world banks are making their trading decisions. That's all we have to do is look back in time to know what's happening. So we can put a line there and say when it hits there, we know that. Today, we can say with some quite a bit of certainty that this area right around the 1.4865 level would be a support. We didn't have to see what was going to happen today. We could look back over here in 2012, 2013, where you could see the support develop here. So we knew with some certainty that that's where the market would at least target on the way down, where what? A decision's being made. It's a decision zone where sellers are exiting and buyers are entering. It causes a pause. It causes a hesitation in the market. We can continue to just bring lines down into the chart where we can see classic historical areas where the market just finds a pause and makes a trading decision. Either the big money is getting in or out of the market. So that's just kind of the 60,000-foot view of the pound dollar here on the weekly chart. And you're probably saying, well, I'm an intraday trader, I'm a smaller investor. The weekly chart doesn't make any sense to me, so let's continue to go down to the smaller compressions. Let's take it down to the daily chart. We can still see those main decision points where the market, the big money, has made decisions to enter or exit the market. And we can just bring some more of these horizontal lines into the market. We can see here's an area right here that the market consistently over time, there was a decision being made right here underneath, we'll call it 1.5225, 30, into that area. We can see resistance. So once it got through there, broke through the top side of that, what would you have expected? The same areas where the buyers were exiting and sellers were entering, creating resistance over here, then becomes an area of support on the other side. Same thing here. We can bring another line right about right here. We knew that resistance here brings in support, and it just happens over and over. We can bring another line here and say historical support becomes resistance. It's not something that we have to make up. It's not any fantasy or fiction. It's fact in the market that each one of these levels is a decision point where buyers and sellers are exchanging hands. If the buyers are exiting and the sellers are entering, we call that a resistance. If the sellers are exiting or entering and the buyers are exiting, we call that a support. That's all we have to think about it to make our own trading decisions. We know if the big money's making their trading decision there, if the big dollars are making their trading decisions at these points, that's where we as smaller investors want to do something very similar, especially given the trend or the direction that the trend is moving in. So we can begin to look at that. And let's get a little bit more detail to the market. What I want to do is I don't want to look right here. I don't want to look at the current market because I think that that's kind of easy to look at. Let's go back in time a little bit and let's look back here and say, what did the market do the last time we were in this area? And I'm going to actually do it in a little bit different manner. And this is the way I do this all the time in my daily trade room. I bring a double line in there because it's a zone of support or resistance. And I see a couple of questions popping up there. Support or resistance, are they drawn from the bottom or the top of candles or the wicks? And I don't look at it as a specific point in time. I look at it more as a zone of support. Because if you go back here, and I'm just going to bring a highlight into the chart. Let's bring just a highlight and highlight between these two lines right there. And I'll just make it this orange color so we can really see it really nice. So you just look back here. You can see this zone. And I'll just look at this area right here because that's easy to see. You see it stopped, the candle body stopped right around the 1.5038.40 level, right there at the top of that orange shaded area where my cursor is. But there was this stretch as it dipped down towards the 1.5000 level, kind of like a rubber band. I look at it like a rubber band. When the market hits a support, sometimes it'll stretch into that zone like a rubber band before finally snapping back. Sometimes the rubber band breaks and it goes down, but it's like a rubber band. It stretches down into that support zone, the yellow shaded area, and then went right back up. You can see it over here, and you can see it once it got underneath it. We look at that as resistance until it gets back above it, then it gets support again. Let's look at the bottom down here, towards the bottom of the chart. Let's put another line down here. Let's go somewhere right around that area right there, and I'm going to bring another highlight. So we can look, we're not even looking at the current time, and we can tell historically what the market is going to do. And I'm going to actually change the color of this one. Let's make it a different color so we can differentiate just for communication purposes here. Let's just make it that color there, and I'll bring that over here like this. So now you can see there's two areas that you have a confident decision zone. The resistance is the orange zone, the support is the blue zone. Anything above the orange shaded area, you would expect it to go up to the next resistance. Anything under the orange shaded area, you expect it to go down to support. And that's the decisions that the big money's making. That's why I'm looking at the daily chart. I don't want to look at what all these little investors that are investing their $100 bills, I don't want to look at what they're doing. I want to look at the people that are making the big decisions, causing a bullish or bearish candle, red or a blue candle. That's the people I want to know what they're doing, not the little guys. And that's how we're looking at it here on the daily chart. So you take those two areas, and we could say with some confidence on the right-hand side, that's what we would look for. I'm actually going to bring this top line down. Let's bring it down to about right here. And we could say there's a zone right around 51.25. Let's bring this line down. I just instead of drawing new lines, I'll just do it like this. And we could say that there's another zone here, and I'll make it a different color. I'm just going to bring it in here, and I'll make it, let's make it this green color, because that'll be different than what's down there already. And we'll bring that in. So now we have three areas of historical support resistance where we can make our trading decisions. As long as it's above the green zone, we expect it to bounce off as support and go up. If it breaks under the green zone, it goes down to the orange shaded area. All right, so now we've seen that in history. It's fact. It's not something fictional. It's not something I have to make up. I can see it as fact. And now we bring it to the current time. And just for speed's sake, I'm just going to do this so I can drag these. I'm going to go out to the weekly chart so I can drag these over here like this, just for speed's sake, and I'll go back down to the daily chart. All right, there's those same areas. Now I'm just going to zoom in a little bit so we can see this a little bit better. So now we have a clear idea. Remember, we were looking back in, what, 2010, the last time we were here, or 2013, I guess it was. We knew that that history was going to duplicate itself. So did it? Did the history duplicate itself at the green, at the yellow, at the blue shaded area? Clearly it did. They were decisions where the big money, and remember, think of it like a rubber band. Remember that blue shaded area at the very bottom, I wasn't looking at current time to know that the market would stretch down into that blue zone like a rubber band. So we're looking at a continuation of the downtrend. It broke underneath the orange shaded area. Once it got underneath the orange shaded area, we expected the blue shaded area to become our target for the next support, where sellers would exit and buyers enter. This could be very temporary, but it's happening. It's happened today already, and we can see that right now. We could take that same exact information that we've just divined from the daily chart and take it on down here to the 4-hour chart, and we could see those same areas, the green zone, the orange zone, the blue zone, all of those areas where the big money are making their trading decisions. It's not you and me, it's not smaller investors, it's the big money causing resistance and support to develop at these areas. All we can do is jump on for the ride. When they make their trading decision, we're looking to make our own trading decision, and we're looking to make a low risk, high reward trading decision. That's what we want. And everybody's looking for low risk and high reward. So if you're going to sell in the direction of the trend, what's the trend? Let's just put a trend line in here. So if this is the trend, and we'll just put it somewhere right about right here, if we're going to sell in the direction of that trend, what makes the most logical sense? Where's the most logical place to look for a sell order with the lowest amount of risk and the highest amount of reward? And all we have to do is look at these decision zones that I've drawn here on the chart. Well, it makes much more sense to think of it like this. You know, everybody's heard buy low, sell high. But you take that a little bit step further and you say, if you're going to sell in the direction of the trend, you're selling resistance, or if you're going to buy in the direction of an uptrend, you're buying support. So sell resistance or buy support. Just remember that. So once you've discovered the resistance zone, then you already now know where's the lowest risk and highest reward opportunity to trade the currency pair. So as the market was sitting down here, we saw the push under the orange shaded area yesterday. It pushed underneath there, sat down into, what is this, right about the 49.25.30 level, sat down there for several hours. Well, this morning, before the market reached up there into the orange shaded area, I posted a sell order into the 1.5 thousand level on my daily analysis video. I posted a sell into 1.5 thousand. I said, if it gets there, you want to sell it. So it made it up to the decision zone. Was that a low risk, high reward opportunity? Let's just assume for a minute, and I'm just going to bring another line in. Let's make it a red color. So this will represent a potential stop loss. Let's assume that we would place our stop loss 5,050, 60, somewhere up there where that red line is above the orange shaded area. Because now we're assessing our risk. What's the risk? The risk is that it doesn't hold that decision zone. The risk is that it breaks above there and goes up. We're hoping it doesn't do that. We're looking to trade the big money and sell it to go back down. So this was the setup. If it made it to the orange zone, we were going to sell. We're going to target the blue shaded area. Okay? So if it broke above the orange zone, what would you expect it to do? If it broke above the orange zone, it would have gone to the green zone. So that's the risk in the scenario. You've now outlined the risk. Resistance is the orange zone. That's your sell. The risk is it breaks above it, goes to the green zone. Your profit target, we already had decided, was the blue shaded area based on the history of the currency pair. Now, we did have a little bit of a minor profit target right there where the market came to a stop today, but guess what? That right there, even if that became your first profit target, that was back down towards 1.4930. So you're looking at already a 70 pip run if it bounces off the orange zone and just goes down to the last support. So you have a low risk, you've already assessed your risk, and a high potential reward, especially if it continues to go down. And that's exactly what we did today. There's the trade right down there at the very bottom of the chart. The pound dollar, there was the entry, 1.5 thousand. There was the take profit, 1.4880, which is the top, just above that blue shaded area. And there's your profit right there. It was 120 pips as we made a low risk, high reward decision point. You obviously could have taken profit before that, but there was no need to because you had an idea of where the market was going. All right, let's take another, that's one example. And does it work? And on every currency pair in every given time frame or currency pair? Yeah, let's take a look. Let's go over to the USD, CAD. This is just another trade that we did today, and I'm going to actually bring it over to this trade tab over here because this is actually still an active and live trade. That other one was already closed in the history. This is still an active and live trade here on the US CAD. Of course, what's the direction of the trend? I don't think I need to convince you of the direction of the trend here, do I? It's an uptrend. It's been an uptrend for a long time. We're going all the way back to 2011. So really, we have to go back in time a long ways to discover where our next resistance and support levels will be. Let's just put a horizontal line. I want to make it black again rather than leaving it the reds because the black's easy to see. And I'm just going to put a horizontal line at the very top of the chart. Let's go back in time and say, what happened back here the last time the market? Were there trading decisions being made by the big money back here on the left-hand side of the chart last time we were here back in 2008, 2009? Was there a trading decision made by the banks, the hedge funds, and the big money? Well, the last time we were here, take a look. It was the last high. It came in here. The market stretched into that area. Remember, I told you it stretches up kind of like a rubber band into that area. So we knew with a high degree of confidence that this area right here, and I'm just going to highlight between those two lines, that area right there was going to be resistance. We didn't know current time what would happen, but all we can do go back in the past and say the big money, the buyers exited and sellers entered. Where did buyers exit and sellers enter back there? Right there into that green shaded area. And we can see that with some certainty and some confidence. Now we bring that back to the current time. What has it done over the past several weeks? It has found resistance there. So all I'm trying to get you to see is you don't need a crystal ball. All you need to do is have the ability to go back and say, where did the big money make their trading decisions before? And when they do that kind of trading decision, that's the kind of trading decisions we want to do also. As long as it stays under that green zone, there's resistance. That becomes a profit target as the market pushes in the direction of the trend towards it. So right now we can say with some certainty, as long as it's under the green zone, there's resistance. If it breaks the green zone, the decision zone, then we look for the continuation and the next profit target on the way up. Over the past several weeks, months, days, and years, this has been an uptrend. I'm actually going to put one more line. Let's put another line right about right there. Well, we can see the past 4, 5, 6 weeks has found support right around the 1.2400, 2412 area. Does that correlate with what we've seen on the left-hand side? Well, you can see there's resistance, congestion. It's hard to see here on the weekly chart, but there is an area right there where you can see some consistent behavior. We can even go back here. Take a look. All the way back here into 2004, 2005. Did the market have consistent behavior, buyers and sellers changing hands, entering and exiting back in 2004 or 5 around that lower line? Well, of course it did. Look back there. We can even take another line. We can put one right about right there, and we're going to add in another shaded area so we can say that this is our decision zone. Let's make it a different color here so we can communicate here in the webinar today. And I'm just going to highlight right between those two lines. And then let's bring it over to our current time. I need to drag it over a little bit more. Was that a major decision point? So now we can see, we know with confidence for the past several weeks, the pink zone was support and the green zone is resistance. If we're trading the trend, where do we trade the trend? We buy support. If you're buying in the direction of the trend, you buy support for low risk and high reward. Take that information now down to the daily chart. Now you get down here to the daily chart and you can really get a handle on where you should have been buying this currency pair. Another thing that you can do is, of course, you can use other technical analysis tools to give you some confidence in this. I'm just going to throw a quick trend line right here, and you can see there's some rising lows within the trend along that pink shaded area, and you can see some falling highs right here. So above that triangle, we see it targeting back into the green shaded area. So you can see buy low, sell high. I'm going to add one more area. I see that read 10 more minutes remaining. Sorry about that. I got a lot to say. You can see that area right there, 1.2620. Look at this right here. Let's zoom in now in here on the daily chart. Look at that area right there. Let's add another highlight right about right here. And I'll make this a blue color right in that area. So we know that this is a decision zone. Why do we know that this is a decision zone? We see resistance. We see resistance. What do we expect resistance to become? We expect it to become support and a decision point for the market. So as you can see, there is a live trade here on this platform. On the CAD, there was a buy today. Right down here, there's your buy down there. I just moved it there. There it is right there. Well, it keeps moving around on me. There it is. 1.2630 is the buy. We can see the market right now is at 26.90. So even if I was to close it right now, we're looking at about a 60-bit trade. We've had quite a bit more than that already today as it pushed up towards the green shaded area. But all I'm trying to get you to see on a daily basis is that we can discover these decision points where the market, the big money, is buying and selling, entering and exiting, and we can really get a handle on where we can make our trading decisions to buy into support in an uptrend or sell in resistance within a downtrend. And these are just two examples of our trading from the day today. And so since my time is short, I want to switch back over to the PowerPoint presentation just for a moment. And let's go over a few other things. You know, what I'm trying to boil this down for you is that the trick using Indie Indicator is to use them correctly and consistently. Trading, you know, is kind of about probability. The more indicators that you use, and I've just used a few today, that point to a particular outcome, the higher the probability or outcome will be. You know, at the beginning of the presentation, I suggested that you pick a few indicators to master, and I just showed you some basic ones today. That's because when they come together to point to a singular outcome, your confidence is increased in that outcome. If you have two indicators pointing up or two pointing down, that's a 50-50 shot. But if you have 2, 3, or 4 and pointing in a singular direction, that's when probability is increased. You know, you can think of these indicators and the support and resistance levels that I just showed you like a brick in a wall or a brick in a barrier. One brick might make a good barrier, and we've just showed you a few today. And that makes for kind of a poor wall, but you get 2 bricks, a trend line, a Fibonacci level, a moving average together. 3 bricks or 4 bricks makes a better wall and a better decision point for your trading. And I think you get the idea. The more indicators pointing to the same direction, outcome, and conclusion, the better. Now, picking out support and resistance levels like I have today, these decision zones, even trend lines for that matter, is often more of an art than a science. You know, finding exact levels rarely happens. Often the level is more of a level of consistent congestion rather than a singular candle body or wick. And you'll probably hear different traders use different methods to identify levels and draw these lines like I have today, and that's okay. What I suggest is that you find a method that works for you, and whichever indicator that you settle on using, find the method that represents that indicator and try it to identify whether it's volume, momentum, trend, whatever that indicator is trying to identify. Use it and be consistent with it. You know, if you're constantly changing the way you use an indicator, it really actually diminishes the value of that indicator. Now, once I've identified the main trend or direction, you notice how I started with the weekly and daily and figure out the direction first, and I find the barriers that I find significant for that day, it really then becomes somewhat of a waiting game. Most of the time, for me at least, trading is waiting. You know, waiting for that level that is safe, that has low risk and high reward to be reached before entering or exiting trade, or really it's just waiting for the right opportunity to develop. You know, however, I will go back and say that trading itself, I believe, is an activity. It's not a spectator sport. You really have to be actively participating in the market to really understand where it's going or what it's doing. And if you don't, at the moment when the price level reaches the indicators and they all converge and the opportunity arises, you might miss it. So trading is an active sport that you have to be involved with, if you want to call it like that. And it's hard to do sometimes if you don't know what to look for, or you just don't have the time to devote to studying the market. Not everybody trades for a living. It's likely a hobby or something you're doing on the side to make a little bit of extra money. How do I know? Well, because that's where I've been there. Years ago, I would sit probably in front of my computer and look at the charts for hours and hours on end and ask myself, hey, oh, now what do I do? Especially on the beginning when I didn't understand that these decision points were where the big money was getting in the market. So we're kind of right back where I started at the very beginning. Kind of a deep breath here. Tell me and I forget. Show me and I may remember. Involve me and I will learn. You know, learning to be a successful trader, I believe, is a journey. But I think it's well worth the time and effort that you put to get in there. Now, at the beginning, I told you that I would give you a link to access my daily analysis. I think, Reed, that you have that link that we can post. Not I can post there. There's that link right there on the screen. If you just go there, you can register. It's all free. At the beginning, I told you I'd give you this free access link. By using that link today, you'll get that it's going to be posted in there. You'll get access to my free daily video analysis. This analysis is where I do analysis for one or more pairs that I am watching for the day, and I do exactly what I've done today. I show you how I arrive at my trading decisions. I also give a little recap of previous day's trades from the last few days, kind of like what I've done already today on the 2 currency pairs that we looked at, and the specific setups that I'm looking for and waiting to enter the market. So as this morning, I posted the trade up there that gave you the opportunity to watch for the pound-dollar trade entry. Basically, what that does is it gives you the opportunity to look over my shoulder as I show you how I arrive at my trading decisions. So go ahead. I see that Reed posted that link in there, forextradersdaily.com/daily mentoring. It's just a free thing. You can register there, and you'll get sent an email that lets you know when I've gotten those videos posted. All right, so I think I've come to the end of my time. I really want to thank you for giving me the opportunity to join in with you today. If you want to join into that daily mentoring analysis video. I'll be happy to take any questions from there. There'll be a email that you can email me from that daily video. But thanks for having me, and hope everyone has a good evening.